What is up, guys? Welcome back to a video. Today we're going to be talking about the ICT 2025 model. And here we have a screenshot of the model given by ICT. And we're going to talk about it today, okay? So don't forget to hit that like, comment, subscribe, and let's get into the video. All right, so first step, determine a short-term session or a daily bias, okay? So when you come to the charts, that's going to be our first step, okay? So you can, we're going to use the AM session, all right? So if we go to the higher time frame, right, we'll do a quick top-down analysis. We can see on the 15-minute chart, okay, that overnight we've been pretty bullish from London, okay? So we took the Asia low here, right? Lots of consolidation in here. We had a massive drop the previous day. So lots of range to the upside here, lots of liquidity. Took the Asia low. London was bullish. So we could potentially be looking for a continuation, which is a profile, in the AM session. All right. So come down to the 1 minute. And we'll pull this back over. Okay. So since we're bullish, right? If bullish, seek a discount array to enter on or after a short-term swing low has been rated. Okay? So, if we look at the 9:30 opening price, right here, 9:30 opening price, okay? We open, we have a lot of consolidation before the opening price right in here, okay? So lots of accumulation. We open higher, manipulate the high, take out the low, so both sides of liquidity are swept. And now if our bias is bullish, then we're waiting for it to tap into a PD array or after a sweep of a short-term swing low. Okay? So we have some short-term swing lows under here. It's then rated. We have a change in the state of delivery. Okay, we also have not one, but two bearish PD arrays disrespected with a candle body closure and displacement. Okay, so these can be used as an inversion for a value gap. Same here, inversion for a value gap, right? Those are discount PD arrays. Okay, we also have this swing low in here, swing low, swing high, lower low. We then, that same displacement higher, candle body closure. We then have a breaker, low, high, lower low. So this up close candle is our bullish breaker in here. And it's overlapping with a bullish fair value gap. So we then now have the combination of these two together is called a unicorn or the unicorn model, right? So this is a very, very high probability entry on a discount PD array, okay? Or this is just about, it would probably, it looks like, just if I can guesstimate by eye, about equilibrium of this opening, little quick opening range from 9:30 to 9:45. So a little bit of a premium there. If we use it from the change in the state of delivery, which is the true shift. So this swing high to the change in the state of delivery, this is in the discount. So if we were to turn on our regular trading hours as well, we can see that we had this opening gap here. It filled the opening gap and then we immediately rejected. Okay. So this is running in a discount, taking out the sell stops into this bullish fair value gap on the regular trading hours. Okay. Now, our target is going to be uh, a premium PD array or premium liquidity. Okay. So you're trading liquidity to liquidity or a liquidity to a PD array or a PD array to liquidity. Okay. Can be interchangeable. So here we can identify accumulation, manipulation, taking out both sides of the market, and then distribution higher. All right. Now, macro times are optimal timing criteria, but price runs inside the bias that began on a macro. It can be still be utilized. Okay. So if we look at the macro in here, we have 9:45 to 10:15 macro window. And you can see within this window, we get this entry here. So first stage, distribution, second stage, and then off to the races. Okay, so weekly opening price. How else can we know where to target for a take profit? Is if we were to measure, okay, the liquidity grab. So from this swing high, the last swing high to swing low that created this breaker, if we were to take our standard deviation tool with a Fibonacci, pull it from the low to that swing high, and we measure it up, we can take profit at 1 standard deviation. Or if you were to hold, we have this 5-minute fair value gap. It retraces down into, for then a continuation back up to -2. So overall, -2 would be a potential target and a high probability for a reversal. And if you can see right into the lunch hour is when we get that drive into just about -2 there. Okay, then we get a reversal back down. Okay, so we hit about -1, reaccumulate back into the range. 5-minute fair value gap into a 15-minute order block, bullish order block, as well as nested inside here ever so subtly is the first presented fair value gap, which is this first inefficiency after the 9:30 opening price. Okay. So we have 9:30 opening. Oh, actually, it's right here. I just noticed that. So our first presented fair value gap is actually here, and you can see the candle bodies pretty much respecting it almost to the T there. Okay, so 9:30 opening price. We get this inefficiency. This is your first presented fair value gap. Which is on the lower end of that 5-minute fair value gap. We then get a continuation up to 19,700 is also a good round number. NQ loves these round numbers, or -2 standard deviation. Okay. So I hope that's helped a little bit. I will write these out too. So different ways you can trade, right? So liquidity. let me see here. Liquidity to a PD array or a PD array to liquidity or liquidity to liquidity. I spelled that right. Wow. Liquidity. Say that 10 times fast. Or a PD array to another PD array. Okay. So you just have to determine a short term session or macro or daily bias. Wait for a sweep of liquidity or it to hit a PD array. So you're either going to choose liquidity or a PD array on the opposite side of your bias and then trade towards the direction of your bias. Okay? Simple as that. I hope this has been helpful. There's a lot in this video. I do have a promo still going on for my Discord. Lifetime access to the VIP, one-time payment. Or if you grab my masterclass course that includes my bootcamp and it includes also inside of the course is one of the 30 videos that are inside of my course. It's probably more than 30, but one of them includes a 4-hour webinar that will go A through Z step by step on how to pass these prop firms and collect multiple payouts and become a fund trader. Okay. If you're interested, grab that. If you do get the course, you're going to automatically get the VIP Discord and all the other premium channels in the Discord for lifetime automatically. So it's a really big bargain. It's so I feel like it's a really good deal. You're gonna get everything with the course, or you can just pay the one time for the VIP. Come trade live with us, where we do this day in and day out. So learn the specific times and reversals and way more in depth, and lots of examples just like this. All right, guys. Till next time, trade safe. I will talk to you guys later. Have a blessed day.